Welcome to FXStreet. Today we're going to be talking about Sandbox and how it is set for a 20% gain with bull support. But before we dive into the technicals, please make sure to subscribe to our YouTube channel and follow us on Twitter at FXStreet Crypto to be updated on the hottest trends in the cryptocurrency market. If we have a look at Sandbox price action from the past few days, we can see that on January 24th, we have a sort of hammer formation that has started or sparked a small uptrend in the past 7 or 8 days, where we had several tests on the green ascending trend line. With that coinciding, the top sides of each candle have been trading up higher, so we had higher lows and higher highs. But apparently on January 31st, price hit a curve a little bit with bouncing off the pivots, being rejected by the bears, and has been sending price action a bit further to the downside. This is quite normal because after a price rejection to the upside, you will often see 1 or 2 days a small fade. As long as the fade here, although it is trading a bit below the green ascending trend line, as long as it does not break below either the low of January 30th around 3.71 or the low of the 31st on 3.60, as long as we don't really breach those levels, it can still be a false breakout. Could only offer some more room for entry for bulls to enter, which would then see a sharp uptick towards the 4.72 handle. With that uptick, that would coincide for the moment, if we have a look, that would roughly return around about 20 to 23% of gains in the process, which is not bad at all. The reason why we can forget a little bit about this pivot here, it's because that was the pivot of January, which was a perfect handover here, right? You see here bears trying to push price below the S1 support from January. They got rejected, bounced off, but quickly fell back, broke clearly below it, with a handover from one session to the other, perfectly almost on the support itself, towards S2, bounce off now, and here it got rejected again. But as we are starting a new month, the new pivot here comes in at 426, but it has not been justified or ratified as a new level. So it all depends on, once price action comes up there, if it will be again a sort of a support resistance pivotal level as we have seen in January, yes or no. For the moment, because of the fact that the RSI is now once back again with that little fade of the past 2 days, is now back below 50, that offers a bit more room for bulls on a sort of 60-40 return. That means that bulls have more 60% uptick potential, while bears only hold 40% to the downside. So that would mean that bulls are more in favor of an uptick. Add to that as well current global market sentiment, where in just almost 2 trading sessions, US equities, for example, are ready to erase January losses and tie up with gains and probably new all-time highs by the end of February. So that normally should see spillover effect going into more risk assets, as amongst our cryptocurrencies, of course. So that should give a positive effect, a positive tailwind, which would then set the scene for Sandbox to return above this pivot level and go to the 470. Once above there, it becomes a bit tricky because then you have the 55-day moving average and this overall a bit longer term red descending trend line as a sort of cap, double cap, hovering around and probably limiting price action before hitting $5. So in order to break this little area here between the 473 and the 5 handle, that would need quite some substantial tailwinds and very, very solid risk-on sentiment that opens up then the room for more uptick towards maybe even 878 by Easter or later on in the year. But that's a bit too far ahead. So for now, watch the false breakout possibly. As long as it stays contained between these two legs, it's all fine. A great opportunity to get in long. And then by the end of the week, normally we should see a ramp up towards the 470 handle as long as risk-on sentiment keeps continuing throughout the week with support. In case that support should fade, you might never know that Nasdaq takes a turn for the worse and dips lower on more worries, or if the job report on Friday, for example, comes out very sharply negative, which would point to, again, issues and more sticky inflation to come, for example, then this could see a further continuation to the downtrend, where the phase here, for example, as a first halt, and then probably around here with the flat top we had on the 24th of January, before then doing a complete retrace back to where we originated on January 24th, with the 200-day simple moving average coming in as very solid support around $2.60. So that would give here a certain belt of security, a belt of support, where bulls will try to go again in for another bounce off and another attack towards the 450 handle and possibly the $5 handle then next. That's it for Sandbox for today. Please remember to subscribe to our YouTube channel and follow us on Twitter at FXStreet Crypto.